So first, what would you add to convince investors to go to Africa? Is it worth it, Gabriel? If you say no, I'm very embarrassed. So.
Good afternoon, everybody. I will certainly not say no. I will say yes. I think that the investment climate has improved a lot in Africa. I think that the growth pattern is there as well. And I think that most of the institutions that are bringing support to the investors, are being organized and are becoming more performing than they used to be. This applies to private equity. It applies also to stock exchanges. It applies also to those, I would say, foreign direct investment people. And therefore, I think that with that framework, things are improving. I'm not saying that things are perfect, but things are improving. As you know, to build up an infrastructure, it takes time. We are progressing, I would say, regularly, but we won't have, for example, the capacities of what we can find, on a New York place or London place yet. But I think that, the progress that we're having are interesting and are certainly worth to be looked up.
Thank you, Paul-Henri. What would you have to add to convince investors to go to Africa?
Thank you, Gabriel. We certainly believe that Africa is the place to go in terms of investing. And if you look at the realities in terms of returns, and even on a risk-adjusted basis, you can see clearly that Africa is well positioned, whether you're talking about listed market or private equity market. One thing that we need to be cautious about, though, is how Africa is playing against the other emerging market. Because even if we are a good investment destination, we need to be sure that we are strong enough to battle against Brazil, Russia, India, and China. So that's
you can make it. You can make it.
There's still some work to do, indeed. And Gabriel has just mentioned infrastructure. Indeed, that's an area that we need to improve significantly. But we strongly believe that with a good financial framework, and especially if we are able to strengthen the financing capabilities coming either from the private side or from the listed side, there's significantly way that we can improve that area.
Thank you. Jean-Marc, what are the main sectors to where to invest in Africa, and especially for the SMEs?
Yeah, maybe just before I touch on that point, I just wanted to say I have a slightly different angle to what was just said here. If you want to go to Africa, it depends who you are. If you're an investor, I'll say, well, come to Cauris Management and we'll do the work for you. But and if you are a private equity player, I'll tell you, well, Africa is really tough. Don't go there. So yeah. But anyway, in terms of sectors, what we look at, I told Rory earlier on that I'll be stealing a lot from his presentation, and that's what I'm going to be doing now. I guess we do a lot of consumer goods. A lot of the PE players will tell you that they look at consumer goods, because everything that faces a consumer is important. If you do believe in what happened in China, what happened in India, etc., you have to believe in what is happening in Africa, because you have 1 billion plus people.
And with a middle class going
exactly. You have a growing middle class. You have countries that don't know yet how to measure their GDP, because you see countries like Ghana that will come at some point and tell you that, I've raised my GDP by 60% just because I didn't know how to measure it earlier on. And that's something that you see in other countries. And what I'm saying by that is the fact that the reality is even the GDP numbers that you see for Africa are not the real ones. They're much bigger. So we look at consumer goods. Obviously, there are some people, not us, but there's some people that will be looking at infrastructure, because there's a lot of opportunities in infrastructure. And the sort of returns that you see in infrastructure in Africa are much bigger than elsewhere in Africa. You see everything that is linked to financial services. We've seen that there's a lot of capital that goes in there already. And to some extent, you can say that financial services is also consumer-facing.
What are the sectors? Infrastructure, processing industry. How do you explain this lack of a processing industry in Africa?
The industrial thing, right?
Raw materials,
yeah,
but
you see a lot of raw materials, that for sure. But when you look at Africa more deeply, you see that in Southern Africa and Northern Africa, you'll have a lot of processing already. When you compare it to the size in the GDP, you compare it to the Western countries, or you compare it to emerging market, actually, those countries are not shy of what is happening elsewhere. But where the issue is the middle of Africa. For some reason, very much what Ecobank covers, and for some reason in that part of Africa, there's not enough investment in industry, And I believe that it was due to a lot of factors, of which government ability to foresee the future and to bring that future to the people, and also education. The reality is that you take an engineer that comes from Togo, his pay is 5 times the same type of engineer from India. So the guy is not keen to go back to Togo to work there. That's a reality. And actually what you see sometimes in firms in Togo is that we do import some engineers from India, which is kind of funny.
Do you have, Malick, any comments on something to add to what Rory and your partner said?
No, I think more than anything else, I think it's an inflection point. I think we've had many false dawns in Africa where, if you look at all the statistics as well, there's been an upward trajectory, and one level or another, we've had a regression. At BlackRock, I was part of the emerging market debt investment team, and after that, part of the equity team, and we were investing on the listed side. And then
sorry, can you put the microphone?
And eventually, we actually, a lot of the investments we made in Africa were on the natural resources side, which is naturally most of the asset managers do, and on the larger cap listed equity side as well. And what I've seen over the past 2 years, particularly working with the sovereign institutions, the central banks, and particularly looking on the ground as well, there has been a shift across the board. I think we're very quick to have a very monolithic view of Africa as one. But if you look at each of the segments, if you look at the macroeconomic fundamentals in countries as well, they've improved. If you look at the regulatory framework, which has been one of the key hindrances to actually getting access to the markets, you've seen a much more significant improvement. I think if you look at corporate governance structures, I think they're actually much more vibrant than Brazil or Russia or China, where they have structural issues, and we've seen that already this year in the underperformance of the markets. But more importantly than not, I think you've seen a general realization of the Pan-Africanism as well. I think historically, if you look at all the trends, intertrade between African countries, all-time low compared to Latin America or Asia. The second point is, while you haven't seen a greater emphasis from a government perspective in terms of encouraging industries and growth, I think there's naturally been a more alliance towards the natural resources play. There's much more initiatives going on in terms of consumer sectors and bringing in entrepreneurial opportunities. And the third factor, which is absolutely important, is that you've seen much more FDI investment, diaspora actually investing in Africa and looking at the opportunity set. That creates a stable domestic savings base. It creates a stable investment base as well, where you're taking away a lot of the volatility historically, where you've had pretty much more of a hedge fund speculator play as well. So I think the trajectory has been very positive, and I think the opportunity set is absolutely compelling. And I think having firms looking at it, I want to plug in Silk Invest as well, having both on the listed equity and private equity, because the synergies are absolutely apparent and important.
We're going to see
it's absolutely critical.
Point, yeah. But Harry, have to identify the champions among all the SMEs in Africa. How do you detect the winners or the future winners and the others? What are your criteria?
I mean, maybe Gabriel is the best fit for that.
Yeah,
because he used to be a banker. I'm not a banker, so
No, but you're tracking the good.
Yes,
the good place to
indeed.
invest.
I mean, before that, I think it is critical to understand the critical role that the SMEs are going to be playing in Africa going forward. The mass of wealth and innovation is sitting within the SMEs today. And what is lacking the most, and I guess that we're going to talk about that, is clearly the financing capabilities to support those SMEs. And that's where private equity and listed market should play. Now, in terms of identifying them, I guess that's the most important thing that you need to do is what are the critical sectors that you need to focus on. And today you have some emerging trends that you have to follow. One of them, which is critical, is, for example, the IT sector. We have seen some SMEs, 5 to 6 people, setting up some very bright companies with huge innovation that you can't see in Asia or you can't see in Brazil. When you go into Kenya, for example, you can see some ICT setups or firms amazing in terms of the innovation that they are putting together. If you take also the financing services, alongside with the banks, you have also some mobile payment platforms that have been designed in Africa that are very helpful in terms of how the banks are making money. So the first thing that you need to do if you want to identify the SMEs is, number one, I think that you need to focus on the sectors that are growing. Mm-hmm. That's number one. So I shall say financing services, energy, agro-processing, of course, information and technology. So that's the first step that you need to do to identify those sectors. And number two, of course, in the SMEs, what is critical is the leadership. If you have the good people, indeed, you can assist them in growing the business.
There is a big development now in undersea cables for internet, to bring internet quicker to the continent. Is it a big change in the future? Will it change something in terms of telecommunication?
Yes, indeed. We have seen that shift. I mean, I think all of us here coming from Africa, if you go to Africa, let's say that 3 years ago, to have access to high-speed internet, you struggle in some countries, right? You go into an hotel in Lagos, you want to download the Bloomberg page, is going to take you an hour to have just a home page. Right now, if you go into any country, name it, even if you take the tiny Togo, you go to Togo today, your BlackBerry is going to be working, and you can download as fast as in Senegal. So yes, things have significantly changed in the last 3 years.
It's a big issue for Africa too.
But it has changed. I mean, we have seen significant improvement on that aspect as well.
Gabriel Fall, how to identify the good SMEs, and would you have to?
For me, the major factor is the human factor. You know, not everyone is competent, not everyone is honest, not everyone is
like
a
everywhere,
good manager.
not only in Africa.
Not only in Africa, of course. But for me, the success SMEs are those who have good leaders. It's very important. It's very important that they want to comply with the general management rules, to be able to structure their company as the company is growing, because sometimes they start on an unstructured type of company, and therefore they have to structure it as they are growing, which is not always easy to do, and this is not always what all the SME manager are thinking. And therefore, as far as I'm concerned, in terms of financing the SMEs, of course, the credit factor is important. The credit is a merit, okay? And therefore, I measure the success of the SMEs through the human quality, the management quality. It's not, for me, it's not a sector which is better than another sector. It's a manager who is better than another manager.
And our managers in Africa are very well educated in
yes.
In France, in America, in United Kingdom. You all have the diplomas from these countries.
Yeah, it's also, you know, a question of behavior vis-a-vis, you know, their new wealth. It's a question of behavior with like training their staff, okay, being able to provide, I would say, a good compensation. Not all the managers, SME managers, are providing their staff with a good compensation. All these factors are important to me in order to identify the success industries.
And governance made progress in Africa during these last years. It was the bad point. Well, the one of the main criticism.
In financial terms.
Yes.
No, I think
both in financials and companies.
Okay.
The way companies are managed.
The public company you're talking about?
All companies. The question of governance in Africa, private and public companies.
Okay, I think they are improving a lot. Today, most of the countries are going to the financial market, to raise debt. As far as I know, you don't have a lot of default, probably very, very, very few. And therefore, they are organizing themselves, in order to meet their commitments. And this is what I think, they are doing. In terms of corporate governance, is the same. Companies are organizing, their board of directors. They are organizing their committees. They are selecting, their managers on a professional way. Today, you don't see, let's say, an institution that will hire its general manager, on an informal basis. They will go through, normal recruiting professional. So all these things, are improving, I would say, the global governance of both governments and enterprises.
Jean-Marc, Savi?
Yeah, when it comes to government, I tend not to discuss too much because we know what's the worth, right? But if you allow me to just point on this sector that Polari was discussing earlier, which is IT, we backed a company in May of this year called Accent Corporation. And when we backed it, at the end of 2012, they actually had $20 million of revenues and 25+ % of EBITDA margin. If I tell you that this company was not existent in mid-2010, you'll say, wow, that's interesting. And that's the sort of thing that you see in Africa. And those guys are doing something very, very simple. They haven't created anything. They are Microsoft geeks, They understand Microsoft. They were working for Microsoft and other companies. They decided to put some capital together and set up something for themselves and be their own bosses, right? And basically they went to companies because they realized that a lot of companies in Africa, because they're growing, they have some needs in terms of organization. They have some needs in terms of just becoming a bit more efficient. Because most of those companies do realize that they are not in a sort of very local game anymore. They have to compete against others, And those guys have been able to get to $20 million within 2 years. Well, the reason why we backed them is very simple. We felt that they were not organized well enough to move to the next level, i.e. in terms of proper organization. Those guys, to be honest, if they had all that it takes, would have been able to actually grab $40 million this year. We're not going to get there, but it's because of what Gabriel was saying earlier, because of the quality of the management. Not that they're bad guys, but they're not good enough in terms of management. They're very good in terms of what they know. We need to bring that.
It's worth it to help them.
Exactly. So that just tells you what can happen in the IT specific side of things. Okay. And the advent of the undersea cables, what does it create? It creates a huge opportunity because a lot of people want to access the internet. There's one data which says that 60% of people go to the internet through their smartphones. They actually don't go with their laptop or sitting in their offices, etc. So what you want to do when you are an internet provider is to provide the internet through those devices, as opposed to looking for people who have a PC at work and a laptop, etc. You know, we're really talking about those, tablets and those things that you can carry with you, because we're heading towards virtuality of that space.
So the big question is how to invest in Africa through private equity or stock exchange markets. It's a Cornelian dilemma. Gabriel Fall, what would you advise to the investors? Maybe both.
Yes, I think that, it's probably a sequence. Okay, you may start, with your own promotion, setting up a company on your own private equity, if you wish, and then, bring in a real private equity fund, to help you develop, and then, organize the exit of this private equity fund through the stock exchange. So I would say that those different financing routes are, I would say,
it's complementary.
Absolutely. And therefore, it's not a choice that you should do. I would prefer this route rather than the other. I think that all of them are interesting. I have a story like this, for example, with a company which is based in Senegal. It was a former Unilever affiliate that was bought by its French general manager in the 80s. And he had a very good, I would say, assistant general manager who organized the first bonding of this company, on the regional market. And then we organized for him a management buyout of the company, who is today owner of 87% of this company. We made a second bonding for him 2 years later, okay? And now we are organizing we had a private equity fund that came and grabbed something like 15 to 20% of the company. Now we are organizing the exit of the private equity fund through a stock exchange listing, through an equity listing. So this is, combination of bonding, combination of MBOs, combination of private equity and stock exchange listing.
Thank you, Paul Harry. Do you share this comment? This analysis?
Yeah, I think
disadvantage and the advantages and disadvantages of each system, private equity and the stock exchange.
Okay. Yes, I think both have, of course, advantages and disadvantages.
So one to choose one or another.
No, I think the shift that we have seen, and that's our opinion, is that if you put things in perspective, and I want to see Africa as a whole here, you have 3 stages today. You have one, companies that we can define as local champions, okay, and then you have the regional powerhouse, such as Owando, Equity Bank, and then you have what we call the global challengers, such as Ecobank or MTN. Okay. Now, where you have that option today, and if you want to be extremely practical about it, is that to move from a local champion level to a regional powerhouse level, you have the ability to choose either to go to a bank or to use a private equity, or to look for a local listing. Okay, so yes, indeed, if you want to play in that field from step 1 to step 2, of course, you can use all those options. Then, if you want to move from step 2 to step 3, which is moving from regional powerhouse level to a global challenger level, that's where you have less available options. Because one of the issues that private equity firms are probably facing today is that raising capital is not that easy. Okay, so if you want to move to a global challenger level, you're talking about tickets between, I don't know, 100 and 250 millions. It's extremely challenging to raise that money and to put that money in one name today for a private equity firm. So that's where the advantage of going into the market is extremely clear, in my opinion, if I'm looking at the market today. If you take, either you take MTN to their story, for example, you can see that from 2006 till today, to fund the expansion into 22 countries, basically what they did is that they used the listed market. They go and raise capital from the market. So in that field, I think that more and more listing is becoming now one of the only available options.
So the best thing is to go to you, to have good advices, to analyze the market and the sectors and companies.
Or Gabriel.
Probably.
Gabriel is also very good into
Malick,
that.
yes.
No, I think also let's be realistic as well. How many local exchanges are there in Africa? Again, we're going back to that whole monolithic viewpoint. I mean, you're talking about Nigeria, South Africa. You know, when you look at markets like Ethiopia, 91 million people, tremendous opportunity. You don't have that option to be in a listed exchange. So let's be realistic here. The opportunity on the listed side is available to very limited few companies in countries that are specific there. So the option realistically is two. One is on the banking side, i.e. the local banking network, or the private equity side. Now the banking side is very difficult from a SME. If you look at the loan levels and really the costs associated with financing locally, it's pretty expensive. So for you to even cover your margins, let alone be profitable, if you're a local SME, it's very difficult. At Silk Invest, we focus on consumer, i.e. food companies. I think the technology opportunity is tremendous, but Africa has a problem in terms of basic consumption. I think majority of the countries we're dealing with, they're importing everything from chicken to rice to everything. So we're dealing with companies that can produce that production level and actually scale that up and really supporting that. There's a core of the backbone of the economy. I think Roy's, one of the slides he'd mentioned as well, showing the fact that if you look at the diversified economy compared to what the stock listings are, it's pretty limited in terms of the comparison sector as well. So the two options are on the listed side is from a banking side and a private equity side as well. So I think the trajectory that we advise SMEs, especially because we get a lot of deal flows coming on board, particularly in countries where listings are not available, is first of all, build a track record and a trajectory and a financing as well. Be it a core investment opportunity that's going to grow, and then build out your finances, get local banking financing, even if it's at a prohibitive cost. Then eventually private equity can come in, provide you the growth and expansion, not the operational maintenance, but allow you to expand at least at the initial level, get to that 15 to 20 million mark. And then eventually, once you get to an inflection point where the business has grown towards being a local presence per se, then you can consider listings as well, where you can get the financing on a higher level. I think that's the more realistic option for a lot of SMEs as well. I think on a listing side, I think that's very premature for across the board.
Jean-Marc.
Yeah, no, I think I agree with everything that's been said. And the reality is that it's not private equity or stock exchange, it's both at the end of the day. You want to have a bit of both in your portfolio, and depending on what your risk appetite is, you decide, you know, how much you put in one or the other. Obviously, you know, you could do what people have been doing in the past, which is to say, oh, Africa, there's a continent out there. I'll put some money, a little bit of money in South Africa because it's liquid, and a bit in Egypt because it's liquid as well. Well, Egypt has had some issues, right? And South Africa hasn't had many issues yet, but hey, who knows? You know, somebody asked a question about BEE earlier. You know, well, we'll see how it takes us. But to be a bit more serious, I think when it comes to private equity, the reason why you want to be in PE in Africa is that the perception that you have in the West, which is to say, the stock market on one side, it's liquid. There's PE on the other side, it's not liquid. It doesn't apply yet in Africa, in most of Africa. It may apply in South Africa. It does apply in South Africa because South Africa has one of the most advanced financial sectors in the world. People talk about China, India, etc., but for me, South Africa is more sophisticated than India or China. It's just a question of size. It's just that it's not as big as those countries, because they're countries at the end of the day. We think of them sometimes as continents. So that's one bit. And South Africa is just a region, a big region within Africa. Nigeria is going to be a very, very big region as well. People are not seeing it yet. What impresses me in that country, in my old job, I used to go to Nigeria once a month. It is impressive, the quality of people that they have in Nigeria. It is really impressive. And what those guys are going to do is going to be tremendous. And for us, Francophones, you know, sitting next to Nigeria, we need to make our living as well. So, you know, we've decided at Cauris to have something which says everything in West Africa outside of Nigeria we provide for you. You know, just to show that there's a market there as well. Another 100 million people in West Africa only, you know. So at the end of the day, you back PE because it gives you what you don't have in the listed market. Rory talked about it earlier. You don't have the exposure to the overall GDP that you have if you go in the stock market. You go to Nigeria, again, what happens there is that everybody thinks of it as an oil producer. Go and look for the oil stocks. You see Owando. You know, how many more? Not much. Not much. You see the financial sector. So at the end of the day, I think it depends on who you are, what your risk appetite is, but you want to have both in your portfolio because you want to diversify.
Okay, so this is the lesson, huh? We remember. What is the main vehicles available to make deals in private equity with African companies? Gabriel Fall. Is it easy to contract with company on the field to open and close deals, for example, and technically speaking?
I think that, you know, it's for a number of investors, it's a new environment. When it's a new environment, they need to get advices from people who know the environment, who know the actor. Today, you know, most of the African executive on the financial sector, we know each other pretty well. We know which bank has appetite for which kind of deal. And therefore, you know, through that process, you'll be able to approach, you know, the advisor that you need, you know, to strike a deal in our region. I think that, you know, people like Cauris, you know, they have quite a long experience. They have been in the market for at least 15 years.
Yeah,
17 years. So they know what they are doing. They know the market. They know the players. They know the stories.
Your institution is here to give guarantees to investors too, no? In terms of the stabilities.
Well, you know, if you're talking about the stock exchange, I think what is important today is that if you take a company, let's say a cement company, today, if you want to buy 10% of a cement company, you will have probably to spend more than $25 million, $30 million, something like this. It's not always obvious for a private equity fund invested, you know, in company like that to be able to sell to one single individual or to the promoter, you know, of the company to sell that stake. And therefore, probably their best route to sell that stake is to go to the stock exchange where you can have multiple investors, you know, taking a small share of the company rather than to find, you know, a big investor that will invest big money for little control. You know, so therefore, you know, you have to take all that thing into consideration. There was one thing that the previous presentation said is about the banks that are listed, you know, in stock exchange, banks and insurance companies. But the key factor is, you know, the minimum capital requirement. For example, in the Francophone zone, the minimum capital requirement is $20 million. The day it will go to $200 million, you know, the banks will come to the stock exchange because they will have no choice. Am I right? You see? So these are the things that will make the financial markets evolve over time.
And what sort of reporting should investors expect, Paul Harry?
What kind of?
Of reporting, yeah, they could expect.
reporting by financial reporting.
Yeah.
Okay, financial reporting has improved a lot, especially if you are talking about listed companies. Today you have at least an audited financial reporting at the end of the year, and you have usually quarterly reporting unaudited. So in terms of knowing where the company is, I think that for listed companies, we have reached now standards that are extremely good compared to the Western. I want to come back to what Gabriel has said earlier on, and what Jean-Marc has said also, which is for me the backbone of what we need to discuss about, which is, it's not Jean-Marc actually, it's Malick. I mean, if you look at the stock exchanges, the reality is that in Africa you have too many stock exchanges, illiquid and too small. So the way forward in any case is to see how we can aggregate those stock exchanges. Okay, thinking about regional stock exchanges. That is the way forward. Okay.
And how can we make it?
Okay. I mean, how can we make it? I'm not a politician. I'm going to push for it, but of course it's going to be a political decision at the end of the day. Okay.
Right.
But we need to push for it as a private sector and make sure that we push for that. And I know that, for example, BRVM is doing a very good job in trying to talk to the Ghana Stock Exchange and the Nigeria Stock Exchange to see how they can collaborate further in terms of operations, in terms of listing, and in terms of trading capabilities across the three stock exchanges. So that aspect is critical if we think of the way forward. The second thing which is critical in my opinion as well is what I like to call, and I have a very strong view about this, is making sure that we reduce the barriers in terms of capital investment among countries in Africa. If you take a country, for example, like South Africa, they have reduced their barriers in terms of capital that you can put outside of the domestic market. I think that it used to be 5, now it has been pushed toward 10 or 25%, and you have to invest 10% in Africa. So that is the way forward, because
to open frontier borders, to open the
you can invest outside of your domestic market. Okay, that's critical. If you take a country such as Nigeria, you have tons of money sitting there, but because of regulation forcing those pension funds to invest their money on the domestic market, they're putting their money on the T-bills, on the treasury bills. If you just take that money and think about it, you know, if you just take that money and allow 10 or 25% of almost 100 billion sitting now in the pension business in Nigeria, and tell them that you can take 10% of it and invest in Ghana or in Cote d'Ivoire, right away you are providing financing for not only for the SMEs, but even for the listed companies that need that money. So the two game changers, in my opinion, in how we need to see PE listing market and what is the way forward is number one, reducing the capital controls, and number two, aggregate the stock exchanges.
And that will allow a big group, Pan-African group, to merge, probably, to open the financial.
No, I think the most important thing that is going to create is that you're going to have a pool of financing, a new pool of financing coming from Nigeria, coming from countries such as Ghana, or coming from countries such as Senegal, that are sitting currently in local market on T-bills, basically not working. You know, like they like to say in Cote d'Ivoire, the money has to work. So the money is not working because it's sitting on T-bills, but you can allow that money to start working in much more active companies.
No, I think
Malick
that is
and
absolutely critical. I mean, that point that he's mentioned, and I actually spend a lot of time working with regulators, both in East Africa and in West Africa as well. Ghana is making a bit of progress. And the greatest frustration is the fact that there is liquidity in the markets, i.e. you have domestic pension funds that have quite a lot of investments. Nigeria is a fantastic example. A 20 billion pension fund market, 0% allocation beyond Nigeria. They're limited specifically towards Nigeria. And in fact, the equity allocation is only limited to 25%. So there's actually even a limitation of how much they can invest in equity. I think that will eventually change, because I think as governments become the macroeconomics structure becomes much more sufficient. I think there's been a reliance on the domestic bond market by many governments historically as well. So for a shift to happen from the local pension fund market to move from, let's say, 60% fixed income to 25, 30%, it would be a tough ask to ask for a lot of the governments as well. When the bond issuance is, they're quite reliant on that, the domestic bit as well. But I absolutely agree. The critical element is, but it's a political question. I mean, if you look at the intertrade between African countries, is surprisingly low. Why has West African aviation been a failure across the board? It's because there has not been any harmonization in terms of taxation, in terms of regulation as well, where you're being double taxed between, I'm from Gambia, you get taxed in Senegal and Gambia for the same aviation cost across the board. And so the actual cost of the airline ticket is probably 20%, and 80% is the rest of taxes, inefficiencies, and that's caused a lot of bankruptcies across the board. So I think those political considerations are still a reality, but I think eventually, I think the markets evolve, and I think as you see the macroeconomics improve, hopefully that will shift.
Jean-Marc.
Yeah, no, I agree with all that had been said, and especially the point that you guys made on the Nigerian the Nigerian pension fund, which Rory knows well as well. And those guys, there's been a lot of lobbying that a number of people have been doing so that we can tap into the sort of money that they have, But I'm very confident that he'll be coming at some point, because as you said, 20 billion and growing by 200 million every single month, that's a lot of capital. And when you consider that that's only 40% of people that actually have a job in Nigeria, it just tells you how much money is available out there. But on the opposite, you look at the Francophone, we have the Caisse Nationale de Sécurité Sociale and so on, and those guys don't have money, because we decided to have the French system, and seems not to be working, but we'll try to adjust that. But just trying to come back to your earlier question, about reporting, and just to say a quick word about reporting in private.
Because it's important for
investors.
Exactly.
No, it is extremely important. Private equity is a bizarre asset class because people see it as something like what you've seen in the US, etc. You do big buyouts, you sack people, and then you make money. When you go to Africa, most of the deals are minority deals. You don't see a lot of control. As when you do see control, it is in South Africa. And even though it is in South Africa, you see growth as well. So it's not about sacking people. It's about doing what needs to be done. That's a reality. Secondly, when it comes to reporting, we do report 4 times a year, quarterly reports.
Which is a lot.
I just finished with my colleagues hours yesterday before jumping on a plane, so I know what I'm talking about.
Heavy duty.
And because we have to abide by 2 or 3 main rules. The ones that we call the FCA guidelines, the European Venture Capital Association guidelines.
The international standards.
Exactly. Most of the funds in Africa do abide by those rules, and the reason for it is that a lot of those funds at inception were backed by DFIs, the development finance institutions, the like of the IFC, the CDC, Proparco, etc. So those rules are imposed onto you, right? That's the first thing. You have the IPEF guidelines, International Private Equity Valuation Guidelines, which means that you can't, sort of lie on how you value your companies. That's the second thing. And thirdly, you have things like ILPA, which came out of the US, but that one was more a reaction of LPs in the US that were not happy about how big the GPs have become, the like of the TPGs, KKR, Carlyle, etc. So the reality of private equity reporting in Africa today is that on every single quarter they do report to their investors, so investors are able to know what exists in those portfolios.
Malick, Badjie, Silk Invest provides across access, to investment opportunities across Africa, Middle East, border of Asia. Why this cross-frontier borders is important to you? Because Africa is a link between, the continent and the rest of the world, more than Europe, for example, in the future?
No. Essentially, we think it's a frontier story as well, and Africa is the main story behind it. but you see the synergies and the opportunities set across the board. If you look at some of the countries we invest in silk, Bangladesh, Pakistan, Bangladesh, 100 million population, very illiquid stock exchange, tremendous opportunity and growth potential. Bangladesh, if you look at the demographics, if you look at the macroeconomic fundamentals, it's very similar to Nigeria in a lot of ways as well. So when we look at when we look at the frontier markets, we look at countries that have very similar patterns in terms of both on an opportunity set, because it's a growth opportunity, but more importantly as well, from a consumer perspective. I think our overall arching thing is on the consumer side, particularly as I mentioned to you, the food sector, which is a critical element of it as well. So why we invest in the Middle East, the frontier markets in Africa, is just fundamentally we think this is the last opportunity. And we look at countries and identify opportunities that align with that as well. And our funds are both on the private equity and listed, because as you've mentioned, the synergies are there. You have to look at it across the board. So what we try to do, and I think it's absolutely important, I think this is very unique from a silk perspective, is that we have one investment committee, both that with the public markets and the private equity set. When we look at the opportunities that are across the board, we look at it both from an illiquid and liquid perspective as well. Hopefully getting a much more broader universe and then identifying opportunities and narrowing it in. Eventually, I think usually more than anything else, the case is usually for Africa. But there are tremendous opportunities, and I think the Bangladeshis, the Sri Lankas, the Vietnams are as compelling as the Ghanas and the Nigerias in the next 10 to 15 years.
So it's a big issue too.
No, I think
Africa can be a bridge.
Because Africa is a bridge, and the opportunities are tremendous. You would be surprised how many, how many companies that have similar models from a banking side. You've seen that with Mohammed Yunus and the Grameen Bank, how it's transplanted in to Africa as well, and we've seen that in Pakistan. And they face similar misconceptions. I always think these countries have the same perception versus reality thing. If you think of Pakistan, you think of Bangladesh, you think geopolitical. There's a sense of a lack of understanding in terms of the opportunities. I find the reporting question actually pretty laughable, because I think from our perspective as well, from all the deals that we're looking at, not even the ones we're investing, we're getting 2 years of financial data. The information flow that's coming in from Africa and some of these frontiers has improved pretty considerably. And you find that you get much more access, because we've invested in Russia before, I know at Legacy BlackRock, and we found it very difficult to get access to Russia and China. I mean, the numbers are what the Chinese government wants you to believe. And I think this is absolutely important so when I hear reporting, I'm like, it's gone pretty significantly advanced as well. And I think it's, charting that perception versus that reality thing is always a difficult case with investor base. But to answer your question, I think the opportunity is, the synergies are pretty aligned, and we try and make sure we capture all that opportunity set.
Last question to Gabriel Fall. It seems that French are a little bit shy in Africa, even in West Africa. How do you explain this situation? Why British or American, or I don't know what, are present, aggressive, and the French are not? Should they move? Ask the question to the French. Yes, I know that. But what is your point? What is your point of view?
Maybe the reason is an historic reason. As you know, in France, basically, when after the Second World War, basically the financial sector was a government sector. Everything has to do with developing, financial services, developing the banking networks, etc., etc. Even their sort of private equity was government. So therefore, maybe the private sector does not feel really involved, in those questions. But this is changing. This is changing. We have seen several new private equity funds. Amethyst is one, and other are also institutional investors investing in Africa. HMG is one, and therefore this is something which I think is going to emerge, and we'll have more French investors in our financial markets.
So maybe we can ask the question to the investors who are among us here, the French investors. Are they ready to invest to go further in Africa? Not? Who wants to ask a question about that? Yeah, Jean-Luc? Yeah.
Thank you. I'm quite hungry about an information I was looking at and did not get that information, which is a question both to PE practitioner as well as stock market practitioner. 16 years ago, Gabriel, when we met in Dakar, I was quite hungry about the BRVM story. And today I'm still hungry about that story because I'm not seeing that much companies listed. And why? And the second question, which is the same question for the PE people, is with all those funds raising capital across the world, do you really have good deal opportunities to invest that money? 3 months ago, I've seen in the same day 3 private equity firms announcing new funds, 700 million, 600 million, 800 millions. Do you really have deal flow for investing that capital? And
okay,
maybe I will keep
thank you for this question.
The microphone for the for the audience.
I would say that, okay, you have to take into consideration, other factors than the number of listed companies. For example, in Francophone Africa, we have an inflation rate which is stable at 2% on the last 10 to 15 years. In other words, this has an impact on how companies, get their financing. A lot of them are interested into raising debt rather than raising equity, because debt is not very expensive. Today, good company can have, 7 years, 10-year bond at 6.5%, fixed rate. And therefore, it's an option which is very well regarded by local company. Now, in terms of listing, equity listing, there's something that you have to see. Johannesburg Stock Exchange has 390 companies listed, okay? And if you look at Africa since 2007, we had about, throughout Africa, we had about 105 listings, okay? 105 listings, and if you take out 2007, because you had, the average is about 60 listing per year for Africa in general. So listing is something very important in the life of a company because it is the most advanced status for a company to be a listed company, but it's not very seldom. It's not very, it's not very usual. And therefore, it's a criteria, but it should not be the only criteria when you are judging, a stock market, because I would say 60 company on 27 stock exchange, including South Africa, including Egypt, including Morocco, which had a lot of privatization which were done through the Casablanca Stock Exchange. You see, it's not something which is very, very, I would say, not very significant for an exchange. A listing takes about, to organize a listing, it takes about 3 or 4 years. I see my friend from Cauris who is here. We are in this process somewhat, and therefore be a little bit more patient, and you will see.
Jean-Marc, yes.
Yeah, if I can just add to what Gabriel just said, I read on Bloomberg that Gabriel said that next year there will be potentially nine, IPOs on the BRVM. So at the end of next year, we'll be able to see that. And I think that what that shows is also that the new leadership of the stock exchange, when it comes to Francophone, is keen on making IPOs happen, as opposed to, it's the whole setup that didn't allow companies necessarily to come, but that would change. Also because us, PE players, are very keen today to list on the market, because we've done so many studies that now show us that the issue with market in most of Africa is not actually the primary market. There's a player that is based in South Africa that has done a lot of work which shows that most, if not all, of the IPOs in Africa have been oversubscribed by X%, by X. I don't recall what the X is, but they've been oversubscribed. That means that there is money for the primary market. What doesn't work is the secondary market. Once you buy, you hold. And why do you hold? Because you don't have enough in front of you to take here and go there. Most of the guys that you see on the BRVM that are in there, insurance companies, etc., when you go to them and you say, sell to me, they tell you, okay, I want to sell, but what do I buy? And they tell you, I already have a lot of real estate. I'm overweight real estate. I want stock, but I don't see enough. So it's our job to make sure in the future that we list companies as well. And it's the job of entrepreneurs that can look forward to think of that as well. And on the second question that you asked, which is the one about the 700 here, 800 here, etc., and whether we'll be able to put that capital to work, the jury's out, right? When it comes to us, we have a fund that we're deploying right now, which is 60 euros. We do 2 to 9 million tickets, an average of 6 million. I can tell you that not only we put in that money to work, but on average, we're able to exit 1 or 2 deals a year. And that is not an issue, because the bigger guys will be coming to us. They've started coming to us. We talked about the stock market as an exit route. It depends on where you sit in the market. If you do 100 million plus deals, obviously what tends to happen is that you may be in competition, more competition with other bigger players, but you have an angle. Look at Europe, look at the US. Sometimes on deals in the US, you have 6, 7, 8 private equity players on a single deal, But at the end of the day, somebody has been able to close that deal and to make money out of the deal at the end of the day. So I don't think that we're in a bad place yet in Africa on that front.
Yeah, I think I share the same sentiment as well. From the deal flow perspective, we're still seeing a tremendous amount of opportunities. I think you have to shift the discussion, because if you're talking about 600 million opportunities, if you launch a 600 million fund looking at 50 to 100 million opportunities, to be frank, the deal sizes are pretty limited in Africa. I think companies in Africa haven't reached that level of critical mass as well. At Silk Invest, I think similar as well. We're looking at deal sizes of roughly about 2 to 15 million. Our first fund is fully invested. We're actually launching a second food fund as well, and I can tell you our pipeline can take up to 200 million of deals and opportunities within that same level as well. I think the important thing, in Africa, apart from South Africa, that you see is that, I think you have much more deals where there's a minority stake, where you have managerial impact, but it's a minority stake. The levered buyout deals on that scale, I think, are pretty limited. And I think any private equity house selling you that, I'd be interested to see how well they do over the next few years. I think we're still not at that stage yet in other emerging markets. But if you're looking at minority stakes, having a managerial impact, the growth opportunities with the size of around 2 to 20 million, I think there's still a lot of opportunities out there, and I think it can absorb it tremendously.
Thank you, gentlemen. I'd like to have space to some questions from the audience. Sir, yes.
I just wanted
Please
to
introduce yourself.
Sorry. Andrew Gaines from D-Risk. I just wanted to touch on the point that you made about the pension funds, which actually I think relates as well to the deal flow. I mean, you were saying that it'd be nice to have some of the pension monies cross-border into other countries. I mean, I'm working in quite a few power deals in Nigeria at the moment, and I can just from my own small firm's perspective, well over $1 billion is required just on a few power plants Everyone knows here in Nigeria the amount of money going into power plants is enormous at the moment. That could exhaust all of the pension fund available in Nigeria and more. And here you are lobbying the country to have some of that money across border into your funds. I can understand Mrs. Ngozi's priority to have that money stay in Nigeria. So is there not a contradiction for you guys in that you want the infrastructure in these countries, but yet you also want them for your private equity and other funds as well? So is it not?
So the question is about development. How do you bring to development?
There's huge deal flow. So the problem is not the deal flow. I don't think even though Carlyle and everyone is raising their funds, I think the question is there capital that needs to go into infrastructure? Is it also going to be available locally for your funds as well? Or because Jean-Marc, we know that CDC is not going to be investing in all of these funds. They don't have the capital either. So is there actually not a problem of capital?
So who would answer to this question?
I think we can both answer that. The first thing is that, I get, and that's one of the first things that when I meet with Nigerian finance officials, the first thing they say is there's so many opportunities in Nigeria. Why would we have our pension funds investing anywhere else as well? Well, to be frank, there's not that many opportunities when you're looking at it from a diversified perspective. But another thing, and I think is absolutely critical and important, is that, again, when you think of West Africa and when you think of the opportunity set, all of the local industries and opportunities that Nigeria needs, Nigerian companies are not satisfying. Fan Milk is a fantastic example of a company in Ghana that has had a 90% penetration in Ghana, where they produce milk, dairy products, ice cream, you name it. Fantastic brand, fantastic opportunity set. They've opened up in Nigeria and have actually made tremendous growth opportunity. That is a company that there's no rival of it on the local domestic side. As long as you have, and which is a significant important factor, as long as you have economies and countries dependent significantly on importing from Europe and the developed markets, if there are any local players out there that can tremendously make up that gap, there's an opportunity set. Dangote, for example, you're talking about Nigeria, they've just expanded into Kenya, and that opportunity is pretty compelling for them to take on board as well. So I think when we think of it from a nationalistic perspective, I think the economies or the countries are not at an advanced level where you can say there's so many opportunities there that you don't need to look across the border. That's just not defining the reality as well. But I see your point, and
thank you for your question. Another question in the audience? Sorry, yes.
I have one question. Just Nigerian Finance Minister Nkonzi Ikonjo-Iweala say that when you are in Africa, you're not in Nigeria. You're not in Africa. I'm asking to Jean-Marc, Savi, are you agree? Do you agree with this statement?
Well,
comment?
yeah. Well, that means that I'm not. That means that I'm not in Africa because I don't do Nigeria. Right? No, seriously. What she was. I heard her saying that. But if you recall, she was talking to international investors, saying that if you come to Africa and you do come to Africa, you're not present in Nigeria, then you're not in Africa. But the reality is, if you look throughout our portfolio, right? We have exposure to Nigeria. We have companies that do business with Nigeria. What we've decided not to do at this point in time is to do deals specifically in Nigeria. I'll tell you why. When I was at CDC, we did have a huge portfolio of funds in Africa. One correlation that I saw that was pretty clear is that all of the fund managers that did deals in Nigeria without having an office in Lagos failed. They lost money, as simple as that. When we have money, when you give us money and we reach $200 or $300 million, then we'll open an office in Nigeria and then we'll start doing deals there because we have the relationship to do deals there as well.
Let me add something to that. I think Ms. Ngozi has said also that I think she launched the concept of AIA, meaning Africans investing in Africa. So I think what you were saying was just to please the Westerns, but there's this strong need, in my opinion, to reduce those barriers, those controls in terms of allowing capital flowing out of Nigeria. And let me give you, practical example. If you take the Nigerian companies today, either you're talking about consumer goods or banking sector, their main focus today is to go out of Nigeria. That's what they are doing. Because when you claim that there are so many opportunities, as an investor, you have to be smart. You need to be diversified. Why should you put all your eggs in a basket? It doesn't make sense. So what banks are looking for today in Nigeria is to see how they can invest outside of Nigeria. When you take Dangote, you know, the opportunities for him, probably in refineries, he's looking into Nigeria. But when you talk about consumer goods, he's looking for opportunities in Francophone countries. That's what he's looking for. So I think let us not get ourselves cornered in that debate between Nigeria and Africa. It's a waste of time. The opportunities is there. There is money in Nigeria. Let's see how we can deploy that money outside of Nigeria.
Thank you.
Good evening. My name is Joël Asoko. I work for the newspaper Jean-Marc. It was a tremendous discussion, but what surprised me is that I never heard, even once, the word risk. At no moment you mentioned it, as if it didn't. So maybe I failed to hear it, but the question of information, of access to information is very important, and there are many banks in Western Africa, but especially in Central Africa, well, with over liquidity right now, we're not investing because there is that risk aversion. And how do you deal with it from the private equity point of view? And I have a smaller question, just
this is one. Okay. It's a crucial point. Thank you. Yeah, you're right. We should have
about the
about that. But the risk, it's very general. What kind of risk? Security, safety, terrorism, stability. How do you evaluate the risks? Maybe this is the question: how to evaluate the risks.
It's a big subject, and hopefully next year we'll discuss it. But just to talk about PE and the way we look at risks, right? In our current funds, we've backed 4 companies so far in the fund that we're deploying. And when you look at the revenues that those companies have, you actually see that they draw revenues from 15 countries in Africa. That's one way to look at risk. Every single company that you look at how spread it is. And because you feel that, well, you're backing companies that are in smallish countries and you don't want to stick to just one country, that's a way to do it. But obviously from a PE perspective as well, and that's what PE brings, you are an activist of investments. You want to bring value. You want to sit at the board of the company. You want to set up a strategic committee within the company and discuss all the strategic decisions and trajectories of that company. That's where you bring value, and that's where you stop the company from doing what it shouldn't be doing. And obviously, on top of that, and that's the third point, you look at execution risk. That's what I tried to discuss earlier when I talked about accent. You want to make sure that the organizational structure is fit for where they want to go. If it's not, the money that needs to be spent on the people and the systems need to be spent so that you get where you get. That's a way to look at risk. Obviously, people talk about currency risk, etc. I don't think that's a major issue. You look at PE returns in Africa, starting from 05, 06, and Rob will correct me if I'm wrong. That has not been the major issue. People were more into what are the political risks, etc. The reality is a lot of people have this perception of Africa that we're fighting against. And the one guy actually that dragged us into that, I forgot his name, this singer who raised 8 miles now, Bob Geldof. He went to Ethiopia and told everybody that, we Africans struggle, we don't eat, etc. There are more poor people in China than in Africa. There are more poor people in India than in Africa. The reality of what we're doing is just that, yes, there is a little gap that need to be filled in terms of the way our politicians do their work. And, the private sector is helping actually to push them to see that, oh, gee, there's some things that need to be done. But I don't think today, when you're talking about PE, it's very rare to see a single country focused firm, like I'm doing Nigeria only, although there's one that we know well, but that one is going in the rest of West Africa and looking for partnerships out there, and they're doing deals outside of Nigeria, despite the fact that Nigeria itself is a region. So the issue about the political issue is more perception than anything else. You mentioned terrorism, etc.
Yes, because it's
in the news. But let me say this, and it has nothing to do with the human part of things. Terrorism has an impact, right, on our countries, etc. Look at the north of Nigeria. You know, I don't see any investor, any sensible investor that has decided not to go to Nigeria because of the Boko Haram.
Despite of Boko Haram
of course,
gang and
Lagos has 20 million people. Paris doesn't have that. That's a reality, you know.
I think it's the key points.
Few words,
yeah,
please.
few words. The risk is definitely there. I think inherently, if you're investing in frontier in Africa, there's an element of that risk. Do I think it's exaggerated? If you look at any of the analysis, yes. What we try to do at Silk is we have our own sovereign risk metrics that we actually internalized away from the mercantilist bigotry that obviously is aligned, but just really assessing market access, liquidity, government interference in sectors. We also look to stay away from commodities and natural resources plays. That's an inherent philosophical view that we believe that they're usually aligned with the government and you have much more political interference, and the macroeconomic impact of the country is reflected on that as well. There's different ways to quantify it as well, but we fundamentally believe, again, I absolutely agree with your point. One is it is exaggerated, and secondly, the important thing is just having a diversified exposure, having a Pan-African exposure. I think you'd mitigate a lot of the inherent risks that are in one individual country over another.
Thank you. The very last question, maybe. Yes.
Yes, one quick question to probably Ecobank. You mentioned exit on the local stock exchanges. Do you see any demand emerging from retail clients, and what do local banks?
We're going to see this topic. Sorry,
Ecobank, as an example, probably, to develop products to attract savings from retail people that are wealthier, I would say. We talk about the middle class in Africa. So what are the kind of demand that could be emerging and that could help the liquidity you mentioned and developing a secondary market?
Thank you very much. Who would answer to this question?
I think he said Ecobank. but actually, just because I have to remind all of us that I think that Gabriel is very keen on talking about that topic. I remember, I think that last time in Tunis, you were referring to what you are trying to do at CGF. But just to give my thought on this, yes, indeed, if you want to increase liquidity, there's a fundamental shift that needs to be done in terms of allowing the retail to go into the listed market. So what we are trying to do in terms of Ecobank, and that's what I'm trying to do in my business, is two things. Number one is to build a sustainable retail strategy in terms of providing ability to the wealthier people to open some accounts. I'm talking about brokerage account, ability to go on the market to buy and sell equities. So that's number one. So we are trying to put together some bundles, some packages where when you open a current and a savings account, from a threshold, you can be able as well to open a brokerage account. That's number one. The second thing that we need to build up on is a more strategic question, which is how can we develop a savings culture in Africa? And one thing that we are trying to do is to see how we can use our branch network, which is the largest branch network in Africa with 1,200 branches, to distribute some of our mutual funds, okay, and to allow some of the HNIs, some of those wealthier people to be able to buy those mutual funds. By doing so, you improve also the liquidity on the market. So those are the two, if I may call it, strategic shifts that we are currently executing, just to make sure that we address that significant matter, which is the liquidity matter.
Can I ask a last question? Yes.
Thank you. Thank you, gentlemen, for your participation.